Hey guys, welcome back to another episode. Elliot is currently switching his camera so that he can put his glasses on. Oh, there you go. He's now joining us with his glasses. There we go. Guys, don't forget to thumbs up, comment, and subscribe if you're enjoying our content. Obviously, last week we spoke about Bumble, the IPO, how that was moving. This week we're going to be talking about some FX positions, talk about where we are predicting price to go, and just a mad amount of demand over on my Instagram. So I'll put my handle here, so much demand about the Coca-Cola shares and the reason why I was buying Coca-Cola. So I'm sure we can do a little bit of a quick reel of why I'm buying Coca-Cola. And demand around that was mad. So obviously head over to Instagram if you want to see some of my stock shouts, why I'm buying these stocks and my thought process behind that. Guys, let's get started. So we are going to start now with FX weekly. We're actually looking at the previous week because I'm just so happy with how this has panned out. So the previous week we had this analysis. We basically predicted that yes, the downwards move is going to continue, but I expect to pull back to the moving averages before the sell-off. So as you can see down here at the date on 4th of February, that's when I called that prediction. It's actually in the previous video if you want to go and fact check me, because I'm sure some people out there will. Which will be interesting to see if we see that bounce. So we might see a bounce come back up before we see a continued move to the downside. That is one of the risks. We may actually see price continue to sell off through this level, but it's just something to bear in mind for your trading week to come. So price went down, it pulled back. We've now seen a couple of days slow down followed by a good seller's bar coming in today, which means for me that this is now the next leg down, back down to that support level of roughly 1.195, roughly around that level. So I feel that now we're going to see Euro US dollar continue its downwards move throughout the remainder of this week. And I think that's just awesome that prediction has panned out. If you listened to that prediction last week, get in the comments. I want to make sure that you guys are actually taking advantage of this weekly breakdown that me and Elliot bring to you guys. So let's drop down now and have a look at the smaller time frame. So we look at the 15 minutes. As you can see, this was the pullback that was talking about on the daily where price was moving higher. Today has been a really nice confirmation because what's happened here is we had price break down below the pivot point. It tested the underside of that pivot point, showing us that there's more sellers in the market. It continued to go down, and then it broke through S1, came back up, tested S1 as resistance, and then has sold off since. Now, the moving averages have crossed over as well on the 15-minute time frame, showing us now that this could be a nice time to get in and go short. So we're now waiting for that smaller pullback on the 15 minutes to join this movement all the way back down to roughly 1950 level. So we've got a good amount of movement to the downside until we hit that first major sort of support level where price may rebound. So euro dollar, we are looking to get involved with shorts now. As long as this trend stays to the downside, it looks very, very convincing to me. So let's head over to pound against the US dollar. Now, some of you guys may know that euro dollar and pound against the US dollar are correlated, which is, when we saw the rally on the price here, we've seen price move up just like we have done on euro dollar. Now we actually predict that euro dollar is to move down. Well, actually, pound dollar falls in line with that. We've actually been quite overextended away from the moving averages, and I expect price now over the coming week to start making its way back down to that sort of 1.365 level, roughly around there, and before we see price continue back to the upside. So that kind of falls in line there with the correlation between euro dollar and pound dollar. So that's quite a nice benefiting factor to us. And obviously price has been moving up quite steeply. So it'd be nice to now see that movement come back down to its averages before we see the continued movement higher. So when we break that down onto the 60-minute time frames, and I've gone with a 60-minute because this is what we analyzed the chart on last time. We had this level in there previously and said, look, this is where we are now. We expect price to continue moving higher. We was right on that prediction as well. We've seen price gone up, break through that resistance level there, roughly 1.375, continue all the way up there to nearly touching just short of 1.39 up the top here. We're not far off of that. Price has pulled back. Now, I've drawn in 2 arrows because I expect price may either reject these previous highs like a textbook setup and continue to rally, or if this level fails to hold, then we'll see price come back down. We'll have a deeper pullback just like we did here before we get that extended move back to the upside. So keep an eye on this 1.375 level throughout this week, and also keep an eye out if we get a deeper pullback to potentially join this back to the upside and join those buyers there. So pound dollar, I am expecting a sell-off, but obviously we're going in that longer term direction of the buy side. Now, US dollar against the Japanese yen is also a really interesting one for us. The reason why it is interesting is this is the previous week's chart, again showing you 4th of February. We were saying, look, the price is now at this resistance level. We have confirmed that we're in an uptrend, and we've got this sort of high here, price moving across. Were we going to break through that, or we're going to have a pullback to the averages before moving on? So what has happened? You can see here that price did reject that previous high, and it has now come back down to the previous high that was broken initially, tested that, and it's now set up absolutely lovely to have price continue to move back up to the upside. So again, that is amazing, because that means that we're predicting here that we're going to see dollar strength here, the dollar moving higher, okay? But what we have seen is we're also predicting that euro against the US dollar and pound against the US dollar is going to get weaker. So actually, we're pretty much in full correlation when we look across the full spectrum of the three pairs that we mainly trade. So now I expect this to continue moving higher, pretty much straight off the back. And this is obviously a level that I'm going to be conscious of watching, which is that 105.75 level, just to make sure that we actually break through at this time. If not, we may see a slight pullback. But again, overall, my bias is to the buy side. Let me go back down to the 15 minutes for you. So 15 minutes, obviously, we saw this pullback here on the longer term frame that was talking about. And we've seen that moving average now cross over, which is really nice. Again, I do expect a little bit more of a pullback on that smaller time frame to continue this move back to the upside. So overall, my bias is long. I'm actually looking at cluster entries to that upside as well. Cluster is going to be quite reliable on a strong moving uptrend. So I'm going to be focusing on that quite heavily as well this week. So quick roundup from me, that is euro dollar short, that is pound dollar pullback in the greater upwards trend, and we're expecting US dollar yen to move higher. So that's my analysis. I'm going to hand over to Elliot. Elliot's going to talk about fundamentals and all sorts of what's been going on. Do you have any comments you want to suggest about that, Elliot, what I've been talking about?
Well, mainly looking at cable, I agree. I think we'll see a pullback to 1.375. That was sort of the previous high that, it was tested quite a few times when we were range bound between 1.365 and 1.375. So if bulls can defend that area, I think we'll see quite a nice bounce off that. Be interesting to see where it goes from there. Also, talking about pound against dollar yen is another interesting one. That's roughly around the 145 level, which hasn't been seen since pretty much Corona time. So it's pretty much recovered all those losses from Feb 2020. So interesting times for pound. Definitely now Brexit's out of the way, it looks like we're going to see, pound strength continue for now. But yeah, obviously looking for pullbacks, you don't want to be jumping in at the highs.
Definitely.
Yeah, so go on to what's happened this week. It's been another busy week. So last week we were looking at the performance of the US versus the UK and the indices. And that sort of theme, particularly against the FTSE 100, has continued this week. FTSE 100 has struggled to get out of that 6,550 level, which it has been stuck in for a while now since the sell-off at the start of, the end of Jan and start of Feb. Whereas the US market's continuing to sort of hit their all-time highs. But we have also seen stock volumes at all-time highs, which has being sort of driven by this retail stock trading frenzy. So obviously we've had a few key events that have sort of triggered this off. Obviously the rise of Robinhood, the options trading that's offered retail traders. I mean, you just, even if you turn the TV on now in the UK, you'll see eToro adverts basically comparing how easy trading is to working out and getting fit, which makes me cringe, to say the least. However, we've seen a lot of more retail traders come into the market, and that's just being mirrored in the stock trading volumes that are all-time highs, similar to the trading volumes during the crisis. Which obviously, when there's volatility, you see more volume come in because obviously people are trying to get out, people panicking what to do. So it's quite interesting to see if that continues and what that will mean for the stock market going forward. Friday morning, we saw UK GDP numbers come out. Were actually better than expected. We saw a bounce in Q4 2020 for the UK, 1% growth compared to the 0.5% expected. However, the total for 2020, the minus 9.9%, is the worst since 1709. So, worse than financial crisis. It's, the worst since 1709, worse before the Great Depression. 1709, that's 300 years ago. So
that's mental just on that point.
Yeah.
Sorry to buy in, that is pretty crazy, isn't it?
Yeah, and obviously, the hurrah was that it wasn't minus 10%. Just missed that number. So, but yeah, good to see the UK rebounding in Q4. Obviously, now we're still in this lockdown. We expect, or economists are expecting a dip below into negative territory for Q1 2021. However, obviously, then once we're back out of lockdown and stuff like that, hopefully, GDP picks up again. We can, get back on the right track. Also seeing some more issues this week with Brexit. The UK and EU are arguing over how the treatment of Northern Ireland. So obviously, at the moment, the agreement was that Northern Ireland would be still in the EU customs union. However, Boris Johnson doesn't like that, and and Michael Gove, they're trying to sort of basically backtrack on what was agreed, which obviously the EU are not happy with. And that sort of the main things are the vaccines, how they're getting the vaccines to Northern Ireland, and then goods to and from the UK to Northern Ireland, and the checks which are involved. And this is just causing issues for Northern Ireland. They're talking about empty shelves in supermarkets and stuff like that. So yeah, all a bit of a mess. So last week we also spoke about Bitcoin, and we spoke about how Elon Musk had added Bitcoin into his Twitter handle, which saw the price rally up to 38,000. We then spoke about how we then expected a further move back up to above the all-time highs and towards around 45,000, which did happen, and it nearly reached 50,000. I think the highs on Thursday were around 49,000. So a couple of key things came out earlier this week. The first one being Elon Musk's Tesla have invested $1.5 billion they bought up worth of Bitcoin throughout January. We've also seen MasterCard come out later towards the end of the week saying that they're going to allow cardholders to transact in certain cryptocurrencies. I don't think there's been any specifics on which cryptos. They've just said that ones that are stable, which will be interesting to see. Obviously, still positive news for cryptos, positive news for Bitcoin. We also saw BNY Mellon saying they're going to allow transactions in Bitcoin as well. So quite a lot of positive news coming out. More people, more companies are adopting Bitcoin and cryptocurrencies in general, which is causing, obviously, we've seen ETH approaching $1,800 now. Again, at its all-time highs. So it'd be interesting to see if that can make its way up to 2,000, and interesting to see what happens when Bitcoin hits that magic $50,000 mark, if it does. We also spoke about Bumble IPO last week. So obviously they listed on Thursday, and I think at the high point of the market, they were up 80% of their IPO price of $43. It closed around $70, so about 62% gain on the day. Again, if you got into that IPO, then good on you. Obviously, you're going to be locked in for around 90 days. However, things are looking positive, and obviously, Bumble made a self-made woman billionaire in the CEO. So yeah, it'd be interesting to see what that happens with that over the next month or so. I don't think the excitement around IPOs have fizzled out. And with this retail stock trading frenzy, these hot names like Bumble that the average retailer knows and probably feels more comfortable with trading. It's just going to put more hype around it, and only improve the price, similar to what we saw with Airbnb. So definitely one to keep an eye on. Any pullbacks maybe looking to buy if you're involved in that, be quite an interesting one. I think we're going to see quite a bit of volatility through that. And then obviously the vaccination program continuing along nicely. Nearly 20% of the UK population have had their first jab. And still obviously a long road to go, because you need two doses to be to be vaccinated. And the US have seen 10% of their population have their first dose. So things in that aspect are moving along nicely. Let's have a look at some of these charts. Right, the first one we're going to look at is Dow Jones. Made new all-time highs this week, around 31,500, as you can see on the chart here. Since then, it's gone a bit sideways. So I believe that was made on Tuesday. However, the 31,250 level, which was a previous high that we pointed out last week on the episode, has been respected 3 or 4 times now. It'd be interesting to see again if that holds on Friday. We're just talking during pre-market at the moment, so definitely a level to watch out for. And for bulls to stay in control and keep this making new time highs, I think they're going to have to keep a hold of that 31,250 level. However, I don't expect it to move much further down unless we see some sort of dramatic news come out. I think for now dips are going to be bought, and especially in the US market. So comparing that, similar time frame here, we've got from the sort of start of December to now on the hourly chart. I mean, it looks very different, doesn't it? Saw the early start in Jan we spoke about for FTSE 100, and then since then it's pretty much sold off. And as you can see on the ovals I've got here highlighted on the chart around the 6,550 level, it's just failed to break through that. Every time it's got up to there, it's had a couple of false breakouts, but very quickly been sold off back towards that 6,500 level. We spoke about this level needs to be held for bulls to sort of continue or get a move back up. It has still held. Dips to that level have been bought, which is quite a positive sign. So we just need to sort of break out of that higher range level, and then hopefully we can see ourselves back up to 6,650 and beyond. Only at the start of the year we were trading at 6,900, so still way off that. And it looks a very different picture to sort of the Dow and S&P and Nasdaq. However, one thing I did want to show was the FTSE 100 compared to the FTSE 250. So we just go on the next slide. FTSE 250. So again, same last 3 months time frame on the hourly chart. You can see the sell-off. So the sell-off from sort of towards the end of Jan to the beginning of Feb. However, FTSE 250 compared to the FTSE 100, if you just quickly, you can see it's back at all-time highs. Go back to FTSE 100, whereas the FTSE 100, same sort of sell-off, but it just hasn't recovered. So interesting that the FTSE 250 is adding more value, has got more momentum than the FTSE 100.
I mean, that's the same with the AIM market as well. When you look at the AIM market, it's literally made fresh highs this year. I think it's up something like 15-20% on the year.
Yeah, exactly, which is great. And I think the FTSE 250 and the AIM market, like you mentioned, are more representative of the UK economy, whereas the FTSE 100, we've got bigger multinational corporations, miners and stuff like that. So if you're looking to trade the UK economy, if you're bullish on the UK economy, then you're probably going to get more value and more return, arguably, from FTSE 250 in the AIM market. Again, you can, an ETF exposure would be a good way to get involved in that. Again, if you can wait again for pullbacks, anything like that. But it's just quite interesting to see the difference between the FTSE 250 and the FTSE 100. The FTSE 250 is more mirroring the sort of what we're seeing in the US, whereas the FTSE 100 is just, it's just doing its own thing and not really, just hasn't got that same momentum around it at the moment. Finally, Bitcoin. So we mentioned that on the other slide. You can see it's held that 30,000 level, and then we saw that rally back up to 38,000, came back down, tested around 32,000. And then struggled to get back through 38,500. But then since it did, came back down, retested it, and then exploded up once the news came out that Tesla had bought up $1.5 billion worth of Bitcoin. Is that market manipulation?
That's what a lot of press are asking at the moment, aren't they, about whether or not it is market manipulation. And I think, it's an interesting topic because theoretically, I suppose the argument is what's that guy's name? Bill Ackman, who got that massive trade where he predicted that the Dow Jones was going to crash. when he was interviewed on Bloomberg like 2 months before, and he didn't make it public knowledge, he was sitting on there saying, I expect the economy to crash. This is a heavy doom and gloom situation. And he was short. So, I mean, is that market manipulation by pushing that out as a well-known, investor to a mass amount of public people? Suppose what's the difference between that and GameStop?
Yeah, that's true. It's just the influence that he has, and he knows that influence as well. Yeah, like you say, it's really no different to just saying that on TV when you're knowing. But he didn't. I guess his exposure to Bitcoin wasn't. He didn't announce that or anything like that. In terms of Tesla buying up, they obviously bought that up throughout January.
Yeah, they didn't come out and say.
Normally, if you read someone's analysis, it normally says they don't hold any stock or anything like that, don't they? So yeah, it's an interesting one, but at the same time, I guess, I don't know.
So do they sit as assets on Tesla's book now, 1.5 billion in Bitcoin, and so if Bitcoin goes to 100k, does that mean that that their assets have just grown by 100% on asset sheets and their stock's now worth more money? I mean, how does that look?
Yeah, I guess it depends how they treat it. How they treat it as an asset in accounting terms in America, I don't know. I guess they are.
Yeah, it's just
currency, isn't it?
Interesting one to see how it pans out.
Yeah, interesting. Anyway, next week. So yeah, then up and coming. Obviously, we spoke about Biden's relief package, so that's still going ahead nicely. Pelosi is hoping to get that through by early March, which is quite a tight deadline. Still has to go through the House and then be passed on to the Senate. They're still finalising the exact details of the deal at the moment, so they expect to pass that through to the House in a couple of weeks, and then it'll go on to the Senate. So that'll be the main focus on that has been the $1,400 checks to nearly all US citizens, which will be quite interesting. And then upcoming Monday we've got President's Day, so expect lower trading volumes as the US are out celebrating Biden. Quite a busy schedule next week in terms of economic calendar. We've got GDP numbers out of the Euro, CPI coming out of the UK, and retail sales. We've then got Fed minutes and a bunch of PMIs out of the US and Europe next Friday. So sort of busy week ahead. But yeah.
So guys, we hope that you enjoy our weekly analysis. If you take advantage of this on a weekly basis, obviously show your support, guys. Hit that thumbs up button, get in the comments, let us know what trades you're taking as well and how our weekly analysis is helping you. Stay tuned. It's going to be a quiet day on Monday. As Elliot said, it's President's Day, so everyone's out celebrating Biden. I wonder what Trump will be doing on that day. Probably playing a round of golf or something, knowing him. But yeah, guys, it's good seeing you, and we'll catch you in another episode. Don't forget to thumbs up, comment, and subscribe, and also head over to Instagram if you want to see some interesting stories about stocks, ETFs, and anything else that I'm doing throughout my day. Take care, everyone. Peace out.